All right, hello and welcome to Camel Finance. I'm your boy Camel, and I think we've learned something. I think I've learned something from the market. I'm going to show you what exactly I've learned. I think, and it's a market, anything can happen, but I think what is coming over the next 30-ish days is actually quite predictable. It's actually quite typical of Bitcoin's price structure. So I'm looking forward to showing you that. Just before we get into this, I want to point out that next week is a big week, okay? Because as of June the 13th, which I believe is Tuesday next week, we get the Consumer Price Index data for the US. Now, CPI has been coming down significantly. And as the CPI data continues to print lower and lower numbers, markets continue to rally because we are indeed in that Goldilocks zone. I've done this many times on this channel. Remember, when we come from high inflation to deflation, there's a period in the middle called the Goldilocks zone where things don't look so bad. The other analogy I use is when you go from boiling hot water to freezing cold, there is a portion in the middle, there's a period in the middle where things are quite comfortable. That's where I believe we are. And the reason for that is it's easy when you're here to say, well, things don't look so bad, right? Inflation is coming down. We're closer to the end of the rate hiking cycle than the start of it. And therefore, the markets have this Goldilocks zone, this period of opportunity where they tend to rally. And that, I believe, is the explanation for why the stock market has been doing so well despite all of the bearish narratives and news out there. So first of all, it's going to be really important to see if CPI comes in. Remember, the last print was reported at 4.9%. Trueflation currently has us on a 2 handle. So if we can get even a 3 handle by the government's metrics, of course, the government's metrics are always slightly above what the real world data is. But I do expect this to drop significantly from 4.9%. I expect us to be, at the worst case scenario, in the low 4s and most probably in the 3s. And that is for the government reported rate. So as that happens, I expect this Goldilocks zone to continue to play out. As the pendulum swings from high inflation to deflation, I think there's opportunity for the market to rally as we start to get down towards the lower end of the inflation data. Also, keep in mind, the Fed has had a 2% inflation goal for the entirety of this rate hiking cycle. The closer we get to 2%, the more, and I say this lightly or sarcastically, credibility the Fed has in moving to a pause in rate hikes. Now, if we hop into the CME, you can see here the target probabilities for June the 14th, which is Wednesday next week, of course. We are currently pricing in around an 80% probability that we are going to see a pause from the Fed. We are going to see a pause. At least that's what's priced in currently. This tends to be right. And the only time this tends to be a bit wonky is if we end up on a 50-50 split. But when we've got it at 80% like this, it tends to be right almost all of the time. So I'm quite confident if this can stay like this into the FOMC next week, that we will see a pause, likely catalyzed or at least justified by this lower inflation print. And again, I think that gives us the space to complete the melt up chart that has become the bread and butter of this channel. So we may finally get our answer. Is this thing going to complete? Is this thing going to rocket higher one last time whilst we have the Fed move to a pause before it starts to cut rates as shown here? Do they cut here? This is the question I've been asking all along. Do they cut rates here? Is that what tops the market after they ban Congress from owning stocks for, again, sarcastically, ethical reasons? So super interesting time to be in the markets. And remember, the Fed officially has a short position on the VIX. Liquidity will continue to flow throughout the system so long as the VIX is suppressed. And this is the reason we continue to see VIX suppression. I've been showing this over and over again on this channel. And this is also one of the reasons I expect the VIX to continue down into the low teens as the stock market puts in this final blow off top portion of the rally. So the stars are aligning. Remember, we've been talking about this since all the way back in summer of last year. This was initially proposed, this whole melt up concept was initially proposed all the way back here. And whilst we had to wiggle the goalposts a little bit, whilst I had to move this whole arrow from, I think, from here to here, for the most part, this crazy, wacky idea, which seemed absurd multiple times, is now closer to ever than completing, as you can see. I mean, it doesn't take, it's not really speculation at this point. We have indeed completed the inverse head and shoulders. We have broken out, we have confirmed it, and we continue to make higher highs and higher lows. And as I keep showing on this channel, when we look at the NASDAQ, it looks even more convincing that it's about to do this whole blow off top, melt up scenario. So as ever, one day at a time, things continue to look constructive. Now all it's a case of is seeing if we can get that CPI print down towards 2, seeing if we can indeed check off the pause in rate hikes, and I believe that is what is going to catalyze the final portion of this rally. And then over to Bitcoin, right? I made a video yesterday showing that Binance had been sued by the SEC, and I was saying that this was all just FUD and blah, blah, blah. But then they came out literally later yesterday, and the SEC went after Coinbase as well. So the SEC is officially suing both Binance and Coinbase. And so here we go back to Timothy again. Remember, this guy has 10 years experience advising asset managers on regulatory policy. So let's quickly run through this just so we're all very, very clear on what's going on. The too long didn't read is that this is just a run-of-the-mill enforcement action. The SEC has a short-term advantage, but a long-term disadvantage. Coinbase can outlast this legal process with political maneuvering. The Binance and the Coinbase suit have key differences. In Binance, the SEC has alleged criminal activity in the form of wire fraud. Wire fraud is a crime with jail time attached. But if we look at the Coinbase suit, they only alleged that Coinbase has been dealing in unregistered securities, meaning the paperwork was not actually filed. Registration violations are administrative, which means there's no jail or crime. So the SEC asks for fines or penalties and a court order permanently enjoining defendants from continued violations. So this just means they're going to stop doing what you're doing, i.e. stop selling those coins that we believe are illegal securities, or unregistered securities, I should say. And this is the standard relief sought, nothing special. So ultimately, all of this has really just been signaled to the market to be the SEC or the US government moving to try to slow down crypto adoption. They're trying to get in the way for very simple reasons. Now, just before we get to those simple reasons, remember, we have had all of the bad news we could possibly have, and Bitcoin is still holding above key high time frame support at 25K. So you're just waiting for the kitchen sink at this point. What other bearish narratives do you need to pull the price down? They just simply cannot gain traction to the downside, at least as it stands. Ultimately, this whole SEC thing for both Binance and for Coinbase, and there's probably going to be a few more show up in the meantime, right? All of this ultimately comes down to the fact that Bitcoin is going much, much higher. Whether it's 300K, 100K, a million, depends on your time frame. But Bitcoin is going higher, and the SEC is scared of the fact that people have the chance now to become financially self-sovereign. The more self-sovereign, the more financially free you are, the harder it is to control, dominate, and enslave you. All of this functions as the SEC and the government trying to scare people away from holding Bitcoin. But remember, Bitcoin doesn't care, and neither does the market. I think people were genuinely concerned when it happened to Binance, but then just one day later, when the SEC goes after Coinbase, it kind of signaled to the market like, oh, okay, this is just an attack on crypto. And the market said, I see right through this. I can see what you're doing, SEC, and we don't buy it. And you can see here they go after Coinbase. It has an initial small sell-off, and then we pump massively in the face of both of these lawsuits. Bitcoin, as always, does not care. And of course, this is not an issue pertaining to Bitcoin. This is an issue pertaining to exchanges, and would not have even occurred had they have not been dealing in altcoins. So Bitcoin has reversed both lawsuits because none of it involved Bitcoin. As you can see here, it reversed the entirety of the move. And so, as I said at the start of the video, I think I know what's going on. Now, it's a market, anything can happen, but I'm pretty sure I know what's going on. This reminds me of something. This current 60-day cycle really, really strongly reminds me of something, and I'll show you what. It reminds me of all the way back here. So if I grab this for you, and I pull this over to today, and then shrink it to fit, as you can see here, this to me looks strikingly similar. We had a cycle low, we come back down, we took the liquidity, and now likely, at least what the cycle low is telling us, we have to be open to more sideways action into that next 60-day cycle low due around the 11th of July. So I actually believe that this is what's going to happen. I believe that we're just in one of these sort of Wyckoff accumulation structures, and that, albeit considerably smaller, I mean, this was a massively volatile one, right? This was from highs of 41 down to lows of 28K. Versus this one currently is from highs of 28.5 down to lows of 25.5, right? So this is considerably smaller, but it still, to me, represents just an accumulation, an institutional accumulation cycle, a 60-day consolidation cycle before we can move higher. And what I actually expect to happen is for us to continue to chop sideways into that cycle low, then break out, and for us to do something like this coming out of that cycle low. this is how I see the market. This is how I see it playing out. As ever, one day at a time. If we lose this level of support and start to trade all the way down here, particularly if we lose this upward sloping red one, then we have to say something bad has happened. We have to say that the bearish narrative is certainly in play, and that actually finally would open up much, much lower targets, right? That would open up even a retest of the lows or potentially worse. So whilst in here calling for 10K or a retest of the lows is essentially nonsense. It's ludicrous. Losing this red upward sloping support line and this yellow, if we were to do something like this out of here, right? If we were to do that, or even worse, we were to do this breakdown, then at this point we have to start entertaining the fact that yes, all of these lower numbers come into play. But as it stands, this is how I see it. I think we're quite clearly in a consolidation cycle. I think we have to allow enough time to get to that 60-day cycle low before we can break out. But as you can see from the fractal, it all kind of looks, at least to my mind, like this is entirely possible, entirely feasible, and also entirely within the realm of typical price action behavior for Bitcoin. The other thing I wanted to point out today was, particularly if you've been on this channel before, you'll know I've been talking on and off about the idea that Bitcoin could put in its top this year and then spend the remainder of the 4-year cycle in a 3-year bear market. So it would look something like this. If I grab my pen, it means we would top this year and then spend the rest of the 4-year cycle in a bear market decline. Now, how low it goes, we'll deal with that later. And I've been saying on and off that I was willing to abandon this idea if we broke structure, right? If we did something like this and base out, then we could say, okay, we're probably going to do a 4-year cycle repeat where we base into the halving, get to the halving right around here in March of 2024, and then we'll probably expect to go parabolic as we always have done, right? And so some of you might be thinking, well, yeah, Camel, but this looks nonsense, this looks ludicrous, and we've already broken away from it. Well, have we? If I click in to the fractal chart, which you can see here, and then flip it on log so that it lines up, you'll actually see, again, we're not really doing anything that Bitcoin doesn't do routinely. This is still holding this fractal surprisingly well, isn't it? I mean, there's no denying that. Now, again, things can change and they can change quickly. We could easily start to lose these levels and move down here, in which case we will just completely scratch this one off and say, nope, we're going to do what we've always done. We're going to look left. We're going to trade sideways and base into the halving, and then we're going to go parabolic. And don't get me wrong, like I keep saying over and over again whenever I cover this as a topic, that's what I want to happen. I want us to be able to look left and say, what did we do last time, right? I don't want it to change. And there's two reasons for that. First of all, if we were to do this current one, right, this fractal, if we were to blow off this year, first of all, this will be difficult to pick the top on. This is going to be extremely volatile. There's going to be so much. If you think it's difficult navigating FUD and everything else right now, you wait until we start to smash in its parabolic advance up into these all-time high levels, because every man and his dog is going to be telling you it's a super cycle, we're going to $1 million, we're going to 250K, they're going to be telling you all sorts. And then when we get these pullbacks, whether it's here, or lower down, people are going to be saying, yeah, super cycle, we're going to do this into the halving, and then we're going to go even higher. That's going to be the narrative, right? That's what everyone's going to be convinced of. This is a highly emotional market, and everyone's going to be counting the amount of Bitcoin they've got in their stack and doing the maths of how rich you're going to be at 100K, at 200K, $1 million. And most people are going to get completely blinded by the fact that if we indeed do complete this fractal, if we indeed do move as high as all-time highs and beyond this year, then all that is a typical 16-year commodity supercycle that ends in a left-translated blow-off top move and then spends the last 3 years of the 4-year cycle in a secular bear market. It'll be the first true secular bear market for Bitcoin. So to be really, really clear, I don't know what's going to happen. This is not what I want. What I really want is for us to base. I want this fractal to break. I want us to do what we've always done. I want us to continue to base into the halving and then go parabolic, because we've seen what that looks like 3 times already. It will be so easy to look left and say, well, that's what always happens. Halvings drive bull markets, right? So I would rather this happen. And the longer we go, the higher the top. We could actually get to 250, 300, 400K if we do the standard 4-year repeat. But if we don't, if this fractal continues to play out, if we do indeed base, like I just showed you, into that next 60-day cycle low and then start to go parabolic like this green fractal suggests, then the maximum height I could possibly see is around 130K. So any idea of 200, 300, 500, $1 million Bitcoin is just off the table. It's off the table if the top is coming this year. So I've been rambling for a while. I hope that's clear. For now, undeniably, this, like I said, this is still in play, isn't it? This is quite clearly still in play. And we could allow a little bit of wiggle room. We could do this, and that would buy us some more time into that 60-day cycle low before we go. And just notice if I do this, that puts this portion of the fractal right around the timing band we'd expect to see a 60-day cycle low. And if I put it back to where it was, you'll notice this major leg up comes right around the CPI date release. So is it going to be catalyzed early? Is it going to be a low CPI print followed by a pause that catalyzes this melt up? Is that what's going to happen? Or are we going to have to elapse a bit more time into that 60-day cycle low before we can go? Or are we going to have to break away from this? Are we finally going to break away from this? Are we going to end up scratching this one off, basing, and doing a standard 4-year cycle? Everything and anything is on the table, including the least likely outcome, which is we break down from here and then we just go to zero, right? But we have to be open to everything because it is a market. Now, I put almost no percentage chance of this one happening. But as always, open to all outcomes. We take it one day at a time and we see what the market can give. So that's Bitcoin dealt with. That's what I expect, which basically is we're going to be trading boring into July. Possible catalyst and trendline break will come from CPI and a pause. But if not, we're likely going to do what Bitcoin always does, which is obey these 60-day cycles. And then it's time to find out whether there is actually any merit in the melt up or whether Bitcoin is just going to do Bitcoin things. We're going to look left and repeat that 4-year cycle. Now, moving into Ethereum, right? Here's Ethereum. Ethereum showing relative strength. As you can see, I still have this position open. So it's interesting to me, breakout, retest, possible resumption, not confirmed because we're not yet above the local high from back here. But Ethereum so far still in play. Coinbase was stopped out yesterday, so not much more we can do about that apart from understand that that's what stop losses are for. The same is true of Riot. Riot, the stop was run. So it likely is going to be the same for all of these, right? These are probably all going to just trade sideways into that 60-day cycle low, and then we'll add the position back. But for now, it just is what it is, and we have to be patient and not get emotional. And Marathon also was stopped out as of yesterday's drawdown, as you can see here, just about wicked. So that's unfortunate, but that is also part of trading. That's what stops are for. I still have my MicroStrategy position. That, as you can see, is not been stopped out and is still set comfortably in profit. So far, again, let's reiterate this strategy. We add the Bitcoin, Ethereum, and Coinbase, MicroStrategy, Riot, and Marathon. We add all of these positions. We size the stop so that if all of these positions get stopped out, because that's what's to be expected since they're all correlated, if all of them get stopped out, I take a 2% account risk, a 2% loss of my total account size. And if I'd have just put that on Bitcoin, then I'd already been out the market. But because I spread over all of these different assets, as you can see, I've had to pay a small stop on 3 of them and Bitcoin, and I still have exposure to this market in case we rip higher via MicroStrategy and via Ethereum. So this is working out quite nicely. Maybe we can end up keeping one of these positions or both of them into that next 60-day cycle low, and then out of that 60-day cycle low, I will add the rest back, ready to attack again. It's important to be nimble. It's important to be ready to hop in and out, to just respect your levels, respect the stops, not get emotional. I'm not going to go doubling down when I re-enter. I'm going to keep it to 2% total exposure of my total account size. And that is how you stay in the game. That is how you don't get wrecked. That is how you manage risk like a pro. XRP still above this green box. So all the while we're above that, I have no reason not to push this long. So I continue to do that. The S&P, the NASDAQ, no real change. They continue to push up. The Dow can't quite break out. I'm not really interested in the Dow. Apple, going to be keeping a close eye on this, needs to hold these upward sloping blue and yellow support lines. So long as we're above those, then we'll continue to push this long, lose those on a daily closing basis, and we will be exiting the long and locking in the profit here. Dollar looks heavy, doesn't it? The dollar looks to me like all it's waiting to do is see a lower CPI print, and then it can roll over. And of course, if it can do that, then risk will come on massively. So the stars continue to align quite nicely here. The bonds continue to look heavy. They continue to price in a pause at the next FOMC. TLT still sideways, still range bound. So no recession trade trigger as of yet. Remember, a recession trade trigger comes from a breakout of the top of this range. And lastly, Tesla. Look, I put this out for level 3 members only. This was called out, as you can see, on the Friday of last week. And I said that Tesla is looking to break out this week or next week at the time. And so far since then, Tesla doing Tesla things. So a nice breakout, a nice entry. And that is the kind of alpha you get if you decide to become a level 3 Camel member. Of course, you don't need to, because I give away so much of this stuff for free anyway. And I will always continue to do that. So Don't worry, you don't have to do this. I'm not going to pull the plug or move everyone over. But if you did want some extra setups, then consider joining the team. I'm your boy Camel. I hope you found value here today. I hope you appreciate the work rate. I hope you got the patience to sit through possibly around a month of sideways and consolidation before what I believe is a massive, massive opportunity and potentially a validation of the most ludicrous looking fractal in all of crypto. In the meantime, hope you're doing well in life. Look after yourselves. Take care from me. All the best. Cheers. Bye.